Here's what's coming up on the Peak Financial Freedom Show with Jim and Dan.
A lot of clients don't understand that this type of product exists for income generation. Again, what you do with these types of questions is that you make sure the client understands what they're trying to achieve, and then you design a product and a plan to accomplish those objectives.
There's a high probability interest rates are going to stay low for potentially the next 2 decades just based on historically what's happened. So you can't rely on the bonds to pull you out of anything.
That we actually take those questions you have, we put those answers in writing for you. Because nothing's more important than understanding the risk. Because if you lose 30, 40, or 50% of your money in the next market crash, you're not going to probably get it back.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Hey, thanks for tuning in this week.
We got 30 minutes of great information just for you.
Don't go anywhere. The show starts right now.
Hi, and welcome to this week's AskPeakNow.com, where you, the Sacramento area, email your questions into us, and we answer them right here on the show. Gentlemen, I have some wonderful questions this week. Jim, I'm going to begin with you. My first one is from Ann in Roseville, and she writes, I've heard you on the radio talking about stress testing my portfolio. Are you talking about how stressed I am about my portfolio? Because I don't need a test for that. I'm stressed out and worry every day. What is a stress test for my portfolio? It sounds more like a mental or medical test than a financial one.
That's a great question, and I'm sorry you're stressed out, but that's a good thing, because if you don't know the risk you have in your portfolio, you should be stressed out. What a risk test is that we actually use outside third-party research companies, and we actually take your entire portfolio, how much money you have in each one of those positions, and we can go back and do some back testing on that information and use the data that the outside firm has collected to determine how much you're likely to lose in the next market crash. And there's nothing more important than understanding that right now, before it happens. Because if you can understand how much risk you're taking and how much you could potentially lose, you can fix it now. And that's our job at our firm, is determining what that stress level is and then fixing these problems. And we do this every single day. And we're hearing this more and more every single day. It's a common theme. People are concerned about the risk in their portfolio. We're at an all-time market high. We've had 11 years of a major bull market run. It hasn't done this in American history before. These markets are going to reset. These are concerns that you have and others have, and having a risk stress test is probably one of the most important things you can do right now. So thank you very much for that question.
Thanks, Jim. Dan, my next question is for you, and it's from Marcia in Granite Bay, and she writes, I feel like our investments are all over the place, and we don't understand our money. My husband and I are very conservative and are both terrified of getting hit with a big loss like what happened to our assets in 2008. Where can we put our money today to keep it safe besides the bank? Also, we would like to have it grow a little too and be able to take income from it.
Well, Marcia, that's a great question. And it sounds like you want your cake and you want to eat it too. It sounds like both sides. And everyone wants all those things. Right now, it sounds like your whole goal is to put a plan together. So you want all these different things, safety, income, and probably want to know what your fees are, but the whole goal ends up being putting an actual written plan together. When you look at where you're at right now, things feel all over the place because they probably are. We have clients that come in and they might have 12, 15, 20, 30 different accounts. They have no idea what they have. They think planning is just filing those statements every month or every quarter when they get them. They think that's planning. But what we should do is look at what you have, list out every single asset you have, what type they are. Are they an IRA, a 401k, a non-IRA account? So we put it on one page. You can actually see and visualize what you have to start with and how much money we have to work with. That will then help to start to say, okay, what is the risk we have? Because we'll use that chart to then run a risk analysis to tell you what's going to happen if we have another 2008. And if you had a bad 2008, you could have lost as much as 50%. And of course, you never want to go through that again. So we want to make sure we pinpoint how much risk your current portfolio has, reduce that that down because you probably do have a lot of risk. Find out what the fees you're paying and do a fund analysis and audit, then reduce the expenses down and create income from that by creating dependable monthly guaranteed lifetime income. And we do that using a 3-bucket approach so that we're able to reduce your risk down, provide you liquidity, some income that's guaranteed, and put some money in the market, but just put some stop losses on it so you're not naked in the market. You never should ride out the market all the way down. So hopefully that can help you, Marcia. If you have questions, just feel free to call the office, and that was a great question.
Dan, thank you. Jim, my last question is for you, and it's from Betty in El Dorado Hills. And she writes, my husband and I have been listening to your radio show for a while, and it seems like you look at investing differently than how our current advisor does. I retired last year, and my investments look the same as they did 5 years ago. We have a lot of mutual funds, some cash, and a small variable annuity. The concern I have is that nothing has changed since we have retired, and we could be taking too much risk. We want to plan. We don't want to have to worry about it. Aren't there other strategies that advisors use that are different in retirement?
Well, Betty, great question. And thank you for listening to our radio show. We really appreciate that. And indeed, there's things that you can do right now. And those questions need answers right now, particularly since you mentioned you're in retirement, because this is all you have. And if you lose the money that you've saved your entire life because you've made a mistake, your advisors are not going to pay you back. You have to make sure that you have risk mitigation inside your portfolio, and you have to determine where your income is going to come from the rest of your life. And the only way you're going to get that, Betty, is to have a comprehensive financial plan put in place. Unfortunately, many advisors don't do this. That's not their skill set. It doesn't mean they're not good advisors. It just means that's not their skill set. What we do at our firm is that we actually take those questions you have, we put those answers in writing for you, because nothing's more important than understanding the risk. Because if you lose 30, 40, or 50% of your money in the next market crash, you're not going to probably get it back. And then putting together a comprehensive plan that will guide you through retirement, letting you know where your income's coming from, how much you can spend, and if you do everything right, how much you can leave for your kids. So Betty, thank you very much for that question.
Dan, Jim, thanks so much. And a special thanks for Ann, Marcia, and Betty. Thanks so much for sending those questions in. If you'd like to have your questions answered here on the show, it's really easy. Just go to askpeaknow.com and don't go anywhere. We'll be right back.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Hi, I'm Dan Ahmed. My partner Jim Files and I are co-founders of Peak Financial Freedom Group. We are proud sponsors of the show. As investment advisor representatives of our own RIA, we are legally bound by a fiduciary duty to our advisory clients. Specifically, we owe our advisory clients an affirmative duty of utmost good faith, requiring us to provide full disclosure of all material facts and obligating us to employ reasonable care to avoid anything misleading. We design customized written retirement income plans for retirees and soon-to-be retirees. If you've saved a lot of money for retirement and don't want to lose it, don't want it to run out, and don't want to make a mistake with it, stay tuned. You're going to love the show. We want to help you protect your assets against large stock market losses, earn competitive returns without taking excessive risk, and create dependable monthly income that will last for as long as you live. Our goal is to help you stop worrying about your money so much by building you a customized written retirement income plan. We put everything in writing. And here's the best news. We will not charge you for your plan. You will never feel any obligation or pressure to work with us. It's always your choice. But if you do decide to become our client and you're looking for some growth without taking excessive risk, we get paid advisory fees on the money we invest for you. If on some of your funds you're looking for protection against stock market losses and need dependable lifetime income, and we use an annuity as part of your plan, we are paid commissions. That's why we don't have to charge you additional planning fees to create your customized, comprehensive written retirement income plan. Before you invest any money with us, we will tell you all the fees you will pay in writing. We believe in transparency. And after we build your plan, you won't worry about your money so much. Sit back and enjoy the show. Thanks for joining us.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Welcome to this week's segment of Peak University. Today we're going to talk about bear markets that have happened since 1929 and the fact that investors have lost an average of 39.5% every time this happens. And Jim, We talked about this subject in depth in our new book, our latest bestseller with Jack Canfield. He's the guy who was co-creator of Chicken Soup for the Soul that sold over 500 million copies. And our new book is called Mama's Secret Recipe for Retirement Success. I think it's full, just chock full of information retirees need to know, such as these 13 bear markets. So maybe go through and just explain what has actually occurred here so people can understand this is very important. This data could save your financial security.
Now, remember what Dan just said. Since 1929, the Great Depression, we've had 13 bear markets. It doesn't sound like that many, does it? But every 7 years, on average, we have a loss in the market of about 39.5%. So do we believe that could happen again? Of course it could happen again. Are you prepared inside your portfolio to withstand that type of loss? Probably not, because most people don't put these numbers into perspective. They don't understand what a 40% loss will do to their portfolio. But imagine right now, if you just entered retirement and you have $2 million in your portfolio, and let's just assume history repeats itself and you lose approximately 40% of your money. That means you lose how much, Dan?
$800,000 of your hard-earned money. And we always ask this question, how long did it take you to save that $800,000? It took you your entire time period that you were trying to work to save those dollars. And it's key to understand when you look at these numbers. People are funny sometimes. We ask them, do you think there's going to be another stock market crash? And some people, maybe even you or your spouse, might say, oh, heck no, there could never be another stock market crash. You know what we say to you? We say, are you crazy? We later ask you, are you crazy? There's going to be more stock market crashes because history says there's going to be. We think things always end up going back towards averages.
That's
and
right.
You don't want to bet that if you're in the 11-year bull market that you're talking about, that we're not going to have another one. What's the probability when you're 11 years into a bull market that we're going to continue to go up versus continue to go down?
Well, if you look at historical numbers and you look at analytics, which we do on a regular basis, there's a very, very, very high likelihood we're going to have a market reset. It has to. No different than we're going to have a recession one day. It will. One day, real estate prices will probably adjust. It just happens. You just have to be prepared for it. Not that it's bad that it happens. Markets do reset. It's just if you're not prepared and it happens, it could devastate your retirement.
Well, and right now, most people actually feel in their guts and their hearts that the market is going to have a decline or a crash some point. And they're worried so much because they know they're not prepared for this. They know their portfolio has so much volatility. They know it goes up and down too much. They know it doesn't necessarily earn as much as they want. So they know they're in this vulnerable position, but they've gone to their advisor and they've said, I'm worried, I'm going to take less risk. What has the advisor told them?
They tell them, if you want less risk, we're going to put more money in bonds, right? But when you put money in bonds, that is a security. Bonds have risk. They have what are called issuer risk. They have interest rate risk. And right now, in this environment, when we have historical low interest rates, you can't earn a lot of money on bonds. And just shifting money in bonds doesn't de-risk your portfolio because you have other assets in that portfolio besides just large cap stocks, right, Dan? You could have small cap stocks, right? You could have international
And they're
positions.
all aggressive. And if you go into bonds now, there's a high probability interest rates are going to stay low for potentially the next 2 decades just based on historically what's happened. So you can't rely on the bonds to pull you out of anything. The other thing we have to look at when you're looking at any type of these types of decreases, down here at the bottom, if you suffer a 35% or larger portfolio loss, 35% or larger, you only have a 61.1% chance of coming back to even over any 5-year time period, which means you have a 39.9% chance not only will you not make any money, you won't even get back up to even over 5 years. And during retirement, do they really have 5 years to break even and know that that's enough time?
No, they don't. And you have to understand, this is your money. It's nobody else's money. You have to safeguard your money. You have to understand this data and position your assets so you do not have a devastating loss in your portfolio. Because if you're 60 or 65 years, you don't have 100 years on this planet.
But why do they do that? Why do people ride it out? Because they're told by their advisor what?
To ride it out, to stay in it, to stay in the course.
Don't be a baby. Don't quit worrying. It's your money. You should be worried about it because this happens every 7 years on average since 1929. So why the heck, as a consumer, wouldn't I worry about it?
Well, you should worry about it. We worry about it, right? We worry about it on behalf of our clients. That is why we put together comprehensive retirement income plans, tax plans, and beneficiary plans so we can help safeguard against these massive drawdowns in a portfolio.
And if you need more information, call the office or feel free to go and browse our website.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Do you have an extra plan, or do you just receive statements from where your money is invested? Too few retirees and pre-retirees don't have a plan and are not prepared for retirement. A great way to get a clear, written retirement plan is to meet with a full-service retirement planning firm, not just someone who invests your money. If a clear, written retirement plan is something you want, be one of the first 5 callers right now, and you'll receive our Peak Retirement Navigator review. Here's what you'll receive from your Peak Retirement Navigator. Number 1, a fee audit exposing your direct and hidden fees inside your portfolio. Number 2, a risk report showing you how much you could lose in a market decline. Number 3, a risk analysis to protect your investments from large stock market losses. And number 4, an income plan showing you how much income you will need in retirement. So don't wait. Call the phone number on the screen right now for your no-cost, no-obligation Peak Retirement Navigator review, which includes your Retirement Survival Toolkit. You have nothing to lose, there is no pressure, there is no risk, and it's free. And remember, at Peak Financial Freedom Group, we fix your money.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Welcome to this week's Retirement Roundtable, and as usual, gentlemen, we have a great topic to talk about today. Dan, a really important topic. Are you asking the right questions of your advisors? Jim, like we said earlier, last week, we talked about, hey, maybe you don't know the right question to ask, or maybe you're afraid to ask a particular question. So I'm going to start off right now. How often do you get asked about income for life? Have I structured everything properly so that I will legitimately have income for life to maintain my lifestyle?
Well, the first concern that most people have when they're in their 60s is, do I have enough income for life? Am I going to run out of money? Am I going to make a financial mistake? Am I going to have to rely on my children to take care of me, right? It doesn't matter if you have $1 million or $20 million. Those same questions are present at all times. There are asset classes that you can use to give you income for life. They provide you a guaranteed income stream for the rest of your life. You have no stock market risk. If you run out of money in your portfolio based on your withdrawal rate, the money still keeps on coming in. It's supported by a large insurance company. And if there's money left, it goes to your beneficiaries. A lot of clients don't understand that this type of product exists for income generation. Again, what you do with these types of questions is that you make sure the client understands what they're trying to achieve, and then you design a product and a plan to accomplish those objectives.
Well, the most important thing that people always ask us is, how do I create dependable income that's going to last for as long as I live? That's their number one concern.
You know, it's funny too, because I've seen these reports that are out that take you out to literally age 100, right? And I know that, and speaking with you guys and working with you guys for a while, there are a lot of elegant strategies out there today that weren't available 10 years ago to create that sort of smart, protected money in your portfolio. Fair statement?
Oh, definitely a statement that is accurate, because right now you look at what the financial firms are trying to create, and they're trying to create these types of products that fit the baby boomers. Baby boomers either have retired or getting ready to retire, and their number one concern is going to be, one, making sure they never run out of income for as long as they live. Their second concern is making sure they never suffer a big stock market loss. So a lot of the products today are being built to minimize or eliminate risk of large stock market losses, but more so to create that income that they can rely on for as long as they live, because how many people right now really have a pension as compared to what they had 35 years ago? Pensions have waned because they're a big cost to corporations, so people have to create their own pension type of income.
You know, I know there are people listening today that are saying, hey, I might be a little heavy in the stock market right now, and listening to you guys, that's making me think I have some risk. Jim, are there things that can be set up to completely eliminate risk?
There can. But people have to understand what risk is. What are they trying to accomplish? The first goal we have with every client before we do anything is do a risk stress test. We actually use outside third-party research firms to determine how much risk you really have in your portfolio now, meaning how much could you lose in dollars and cents. And once you understand that, and then you have the discussion with the client to determine how much are they really willing to lose, then you can start the financial planning on that side.
When it's based on, they come in and they think they're taking minimal risk at all.
Yes.
Most people come and they talk to us and they think they're taking 5% to 10% risk, meaning if the market crashes, they're going to lose 5 to 10%. We do one of those risk stress tests you're talking about, and the average individual is going to lose 40%. The average 65-year-old right now that's watching this TV show probably would lose close to 40% in the next market crash, and that's even if they have what you call a diversified portfolio of mutual funds that they think is safe. It's just not safe.
And they don't understand that. It's really, really amazing because they think they're conservatively positioned.
Yeah.
I can't recall one risk stress test we've done on a person coming in seeking a second opinion where the risk factor was less than 25 or 30%. Most of them are approaching 40%, which means if you have a $2 million portfolio, if you lose 40%, you lost $800,000. That's a lot of money to try to recover.
As my father says, that's not lunch money. Hey, I want to bring up one other point with you, Dan. And one of the questions that should probably be asked is inflation. Because what my lifestyle is today for X amount of dollars per month, it's not going to be that way in 5 years, 7 more years, or 10 years. So how do we account for inflation?
Well, there's a couple ways. The first way we like to combat inflation is to punch inflation in the mouth right off the bat. Because if you have a budget of $8,000 a month, most retirees or their planners will build in an $8,000 a month income now and then try to catch up with inflation. We don't do it that way. If you have an $8,000 a month budget, we want you to have $10,000 right now. We want to have more income that's needed. So then it's going to take a long time for that $8,000 to catch up to the $10,000, and we've been saving all along.
Yeah.
And then on the second end, we want to use asset categories that will give us the opportunity for increased income in the future. So if you can imagine, what if you could get a portion of your income guaranteed for as long as you live? But at the same time, if you do well in these accounts and your accounts make any gains, your income then increases by the amount you make. So what if you get a 5% gain in a year and your income increases by 5% and that becomes your new guaranteed income for the rest of your life? That's another way that we combat inflation.
So many great questions to ask. Dan, Jim, thanks so much. You know you've got some good questions. You know they need an answer and perhaps a solution. Hey, give us a call in the office or go to our website. We'd love an opportunity to talk to you. Don't go anywhere. We'll be right back.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Are you worried about taking too much risk, paying high fees, creating dependable monthly income, your money running out? You can stop worrying about your money by meeting with a full-service retirement planning firm, not just someone who invests your money. Call right now to receive your free, no-obligation Peak Retirement Navigator review that includes a total fee audit, a risk stress test showing your potential losses, a retirement income analysis showing how long your money will last, and the steps to create a customized written retirement income plan. Our clients typically have between $1 million to $20 million of assets, but if you've saved at least $500,000 for retirement, we will meet with you free of charge to see if we can possibly help. You'll get free educational copies of Mama's Secret Recipe for Retirement Success we co-wrote with Jack Canfield from Chicken Soup for the Soul, and our beautiful, inspiring 100 Shades of Financial Freedom. So don't wait. Call the phone number on your screen right now. You have nothing to lose, there's no pressure, there's no risk, and it's free. And remember, at Peak Financial Freedom Group, we fix your money.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Hi, and welcome to this week's Is Your Retirement in Jeopardy? Gentlemen, are we ready?
We're ready.
Jim, I'm going to begin with you. What financial index lost approximately 50% between 2000 and 2002, recovered by 2007, only to lose approximately 50% again from 2007 to 2009, and then to finally recover by 2013, ending at the same place in 2013 it started out in 2000?
What is the S&P 500?
You are correct.
That's fantastic. You know, people don't realize this. If you invested in the S&P 500 in January of 2000, you didn't touch your money for 13 years, you made no money. And if you paid fees, if you paid taxes, and if you were taking money out, you even had less money than that.
Dan, my next one is for you. The rule for retirement that states you should never suffer more than a 5% to 10% loss to your portfolio.
What is the Peak golden rule of 5 to 10%?
You are correct.
Well, you know, people need rules about their money, and they feel so uncomfortable and they're uncertain because no one's given them rules. We set specific rules when we do planning, and one of the main rules is never be in a position to lose more than 5 to 10% in your whole portfolio, even if the market crashes 50%, because you just think how people would feel if they know they've now created a portfolio that's limited their losses.
And Jim, my last question is for you, and it's simply to spend it.
What is the reason you saved your money for all these decades?
That is correct.
Oh, can you tell my wife that?
I can.
Oh. No, people don't really understand where they're at when they get into retirement. They took 10, 20, 30, 40 years to save all their money, and they don't understand the risks they have and what could happen to their money if they make a financial mistake. The goal is putting together a plan so that you can decrease your risk and understand how you're going to get income, and more importantly, stop worrying about where your money is going to come from and that it will never run out.
And after I tell your wife that, can you tell my wife that?
I will tell her.
Alrighty.
Okay, good.
Hey, thanks so much, guys. Hey, is your retirement in jeopardy? If so, maybe it's time to give us a call in the office or go to our website. And don't go anywhere. We'll be right back.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Do you have an actual plan, or do you just receive statements from where your money is invested? Too few retirees and pre-retirees don't have a plan and are not prepared for retirement. A great way to get a clear, written retirement plan is to meet with a full-service retirement planning firm, not just someone who invests your money. If a clear, written retirement plan is something you want, be one of the first 5 callers right now, and you'll receive our Peak Retirement Navigator review. Here's what you'll receive from your Peak Retirement Navigator. Number 1, a fee audit exposing your direct and hidden fees inside your portfolio. Number 2, a risk report showing you how much you could lose in a market decline. Number 3, a risk analysis to protect your investment from large stock market losses. And number 4, an income plan showing you how much income you will need in retirement. So don't wait. Call the phone number on the screen right now for your no-cost, no-obligation Peak Retirement Navigator review, which includes your Retirement Survival Toolkit. You have nothing to lose, there is no pressure, there is no risk, and it's free. And remember, at Peak Financial Freedom Group, we fix your money.
Are you worried about taking too much risk, paying high fees, creating dependable monthly income, your money running out? You can stop worrying about your money by meeting with a full-service retirement planning firm, not just someone who invests your money. Call right now to receive your free, no-obligation Peak Retirement Navigator review that includes a total fee audit, a risk stress test showing your potential losses, a retirement income analysis showing how long your money will last, and the steps to create a customized written retirement income plan. Our clients typically have between $1 million to $20 million of assets, but if you've saved at least $500,000 for retirement, we will meet with you free of charge to see if we can possibly help. You'll get free educational copies of Mama's Secret Recipe for Retirement Success we co-wrote with Jack Canfield from Chicken Soup for the Soul, and our beautiful, inspiring 100 Shades of Financial Freedom. So don't wait. Call the phone number on your screen right now. You have nothing to lose, there's no pressure, there's no risk, and it's free. And remember, at Peak Financial Freedom Group, we fix your money.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Hey guys, great show this week. Thanks so much for tuning in.
If you have any questions or need any help at all, feel free. Give us a call at our office or go to our website.
And remember, at Peak Financial Freedom Group, we fix your money.
The preceding program is sponsored by Peak Financial Freedom Group.